walk us through the factors that have left demand growth set to soften this year.
Thank you, and good morning. Yes, so we have, for the world as a whole, we have oil demand growth slowing from 2.3 million barrels a day last year to just 1.1 million barrels a day in 2024 on average. And we're seeing that's a downgrade from our last monthly report by about 140,000 barrels a day, as the latest delivery data for oil demand, especially in Europe, but also in the United States and other major economies, came in really weak in the first quarter. And as you noted, it's weak industrial activity that is driving this in Europe in particular, but also warm weather, a second warm winter here in Europe. And we also seeing a biggest impact on diesel market. So diesel cracks are leading the downturn in prices. And so this is the basis for a downgrade and the weaker demand outlook in 2024.
And recently you've started assuming that OPEC Plus cuts are going to stay in place throughout the rest of next year, maybe even indefinitely. But we haven't had an overt signal of that from OPEC Plus. So I wonder what you're hearing that we don't know yet.
Of course, we don't know what OPEC is going to decide when they set their production policy for the rest of the year. They will meet in the beginning of June. Our methodology, our assumption is that until the alliance signals that they will unwind those cuts, we will, our balances, keep them in place to show how the outlook for global oil demand and non-OPEC supply, with those production cuts in place, what that looks like. So based on our forecast for the remainder of the year, we do see some room for OPEC Plus to increase production in the second half of the year, because even as with the weaker demand outlook that we are projecting, non-OPEC supply growth continuing to grow, we're seeing the call on OPEC Plus crude at about 42 million barrels a day in the second half of the year, which is 700,000 barrels a day higher than the April production. So some room for the alliance to increase production temporarily in the second half of the year. But of course, we will wait to see what the producer bloc will decide when they meet in June in Vienna.
And Toril, I just want to bring in our very own Francine Lacroix, because, of course, she's just had a very relevant conversation on this, a panel in Doha on oil. Fran, welcome back to your own programme.
Thank you so much, Lizzie. Toril, I just got off stage and we're speaking to the chief executive of Exxon and Total and also the Qatari energy minister, and they were really pushing back against this idea of peak oil. Given this oil supply-demand equation that you're looking at, do you see that peak fossil fuel demand being pushed beyond the end of the decade?
Thank you, Francine, and good to see you. So what we're seeing now with oil demand growth continues through this year, next year, and through this decade, but the pace of growth is slowing. That's what we're seeing. And we're seeing that we are with 1.1 million barrels a day demand growth this year. We're back to trend, so the pre-pandemic trend, 2021, 2022, 2023 was really boosted by the post-pandemic rebound. And we're seeing now that it's really the petrochemical sector that's driving demand. We're seeing declines in Europe, for instance. Gas oil demand was declining for a second year running now. Without China, global oil demand growth in February and March were down year on year. So there's clearly signs of a slowdown in oil demand growth. And in our projections, that slowdown, we will see a plateau rather than a steep peak towards the end of the decade based on our current assumptions.
And Toril, if we could just bring it back to supply, what's your message to OPEC Plus? Should they relax the cuts and restore supplies?
Obviously, we're looking very closely and seeing where oil demand growth is coming in. It has been weaker than expected so far this year. This may continue. And of course, OPEC Plus group, they're meeting on a monthly basis and they're watching all the signs themselves. Now, for the third month running, we're also seeing global oil inventories increasing. So both in March and April, we're seeing a very strong oil demand, oil stock builds globally. And this is obviously signs that market, it is relatively well supplied. So this is something to watch as we move forward.